This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen, the most advanced cycle analysis, hot off the press.
Yeah, welcome to another episode of Cycles TV. Today, we will look at the European main indices, and in specific, I will take care of the basic usage for our cycle analyzer, as we have a lot of new community members out there, and therefore I will dedicate a little bit more time on the question how to use our cycle analyzer, how to read a spectrum, what is cycle analysis, what do we see when we look at the charts and the spectrum and the cycles, how to apply it the best, how to pick the right cycle, how to avoid the common mistakes. So this will be the focus topic for today while using the European indices. And said that, I'm live today, so I will be happy to take your questions if I'm able. Live during the stream, latest, always at the end of the session, I will dedicate time to your questions. So thanks for joining me. Drop me a note from where you are today so I see live that I'm not here alone. That helps me. So let's jump in, right? I have prepared for today the German DAX, Deutscher Aktienindex. I will have a look at the French FTSE, the FTSE 100, so the UK London-based main indice, and the European Stocks 600. So we have a broad spectrum looking at Europe today and the indices. Let's start with my home base, Germany. So for that now, opening the German DAX, which we see here on the chart. And now starting with the basics, I would always recommend start with a longer time frame. So here on the channel, we mainly use daily cycles for the analysis, as daily data is available for free for most of us. So it's a good starting point, and daily data is also not so diluted with noise. So if you have more and more shorter time frames, you need to deal with the fact that you have a lot of noise. Daily data is a clean data feed. Indices is a broad measurement of what we are looking into, and weekly series is a long-term perspective. So if you are new to whatever kind of asset you want to analyze cycles, start with a longer component before you dive into the time frame you're really interested in. So for that purpose, I have here now started to use the weekly series. And how to do that in specific, so have a look in the upper red corner. That's how we open specific chart. If you're wondering how do I find the right symbols to put into the cycle scanner so that I get the right ID and the right chart, it's quite simple. For that purpose, you just need to check the symbol which is used on Yahoo Finance. So you can head over to the Yahoo Finance website, search for the asset you are interested in. So let's just do this together. Yahoo Finance. Once you're there, you can search for whatever you are interested in. Oh, no, that's just the index. That's not the one I am looking for. Let's clean this. So here in that search box, they might change it here. I've put just the search, what I'm looking for. So here you will find the DAX performance index. This is what we're looking for. And this is exactly the symbology, which is used by Yahoo Finance. So GDAX-E, which we put into our cycle analyzer here at the top, GDAX-E. And the minus W is just indicating that we start with the weekly series, and in order to let the cycle analyzer know which symbol we are using here. So JFA just indicates that we use the terms and the abbreviation Yahoo Finance uses. So with that set up front, you can almost plot every symbol, at least for daily, weekly. That's quite simple to call up the chart. So once we have that, you see the pricing information here to the left. And then also important to mention is that the starting point for the analysis, it will always pull up by default these 850 bars, which is a pretty basic setting, not to use more than the past 850 bars for the analysis. In that case, it's 850 weekly bars. That's what the dark blue here indicates. So we are going back, in that case, until 2009, the year of 2009. There is a reason for the specification of using 850 bars just as a starting point. You can change it anyhow. And the reason for using the 850 as a starting point is a rule of thumb, which you need to keep in mind when applying cycle analysis. And this also applies to whatever tool set you use, by the way. So as a next step on the weekly data, we want to identify cycles. Therefore, now we use digital signal processing, special mechanisms, Fourier analysis, but that's too much from the engineering part. In order to apply digital signal processing, we need to set the amount of data we push into the analysis engine. And we have a minimum offset, which we need to give our analyzer in order to be able to detect cycles. And that minimum offset threshold, I call it, from the historical data you need to put in, is 3 times the longest cycle you want to identify. So in our case, or just roughly, if you want to detect a cycle with the maximum length of 300 weeks, you need to have 3 times multiplied with 300 equals around 900, 850. So if we want to have reliable cycles up to a length of 300, we should have always around 900 bars of historical data available for the analysis. So, and the multiplication with 3 is just coming from the assumption that you want to have 3 full cycles, which should be in the data set before we can judge if a cycle is there or not. So if we would not have at least 3 repetitions of a cycle, I would call that's not enough data for whatever tool you apply. On the other hand, you could then argue, yeah, but why not use more than 850? The analysis results might get even better using more data. And that is not the case. I mean, it's not specifically the multiplication by 3, but if you assume, let's throw in all weekly data we have on the stock market. So for the US markets, we have 100 years of data available, not just 2009 here. So there's the reason not to push too much data into the analysis. Because the more data you put into the analyzer, the better the cycle length detection will become. So what cycles are in that data set, but the less exact it will become in regards to if that specific cycle length is active right now. So in the current past, not too much away in the historical past, and what is the current phase of that cycle. That gets diluted if you put too many data into the analysis. So often that's used, you might have better results from the cycle length, but you don't know if today that cycle length is still there in the data. So if you would exclude past historical data from the analysis, maybe in the past 1 or 2 years, that cycle was not there again. It was there 80 years before, but not in the past 2 years. So it's no information at all. Even you would be tripped on the false foot if you would use that cycle for forecasting. And second, even assuming the cycle is there, you need to know the phase of that cycle very specific to the current time you're analyzing. You don't want to have a rough phasing. So phase means where are we in that cycle, yeah, from top to bottom. And if you just average the cycle phase over 100 of years, it might look good on the past data set, but it's just on an average within the past 100 years. That is very, very bad if you want to have a clue where we are at today's point in time in that cycle phase. And to get better results if a cycle is active today and what's the active phase, use as minimum as possible data for the analysis. So that's the basic understanding how to decide how many bars to use for that kind of analysis. So you could use 1000, 1200, 1400. That's not the case, but don't throw in all data you have. So that's the starting point. This is how it will look like on every screen if you would open the data set. So at the bottom of the screen now, we see the outcome, so the cycle analysis, what I just explained, why we use that kind of historical data for the weekly German DAX. So now looking at the spectrum, that's the next important point if you analyze cycles. You need or you should have an understanding about what the cycle spectrum is about. It's not just about data, it's not just about length. You need to have a visual idea of what you're seeing here. And the spectrum in general gives you the every cycle length, so from 0 to up to 300, even 400. So that's the cycle length. So, and for each possible cycle length, it shows you the amplitude, so the magnitude of the cycle in the data set. So there might be small cycles which have just small seeing here on the y-axis. So there might be small cycles, but on short terms they have no impact or no influence on price movements. So you could skip and ignore that. And if you have higher readings on these y-axis in regards to the amplitude, that means these cycles have more influence on the price movements. So that's also a kind of idea to transfer that reading into the financial world. So the amplitude gives you a kind of idea how much that cycle might influence the price component. And the length component is then the information, so where that peak is, so where that exact peak in that visual spectrum is, that's the exact length of that cycle. You will read it here from the x-axis. And if you hover over that point with our analyzer, it will show you this specific data. So it has 115 weeks in that case. And the strength and Bartels score is also given in the phase, in downward phase. So there's a lot more than just the length. So the Bartels score, and let me show you that, is another measurement of if this peak just from the visual shape in the spectrum is a good or a bad one. Bartels is a measurement just from the statistical point of view. For now, this is digital signal processing in the frequency time domain. And once you have a cycle or a dedicated length identified here by that analysis, it would make sense to check also from a statistical point of view if that cycle length has a statistical significance in the data set we are analyzing. And the value goes a maximum up to 100. So the higher that point, so close to 100, the better. The lower, down to 0, it has not very good statistical significance. So every value above 50, above 70 is a good Bartels score. And strength is a relative value in regards to how important is that cycle impacting the price movements of in that case, the German Aktienindex. Because amplitude on its own is just the information about the amplitude the cycle has at its maximum point over the given cycle length, so it will influence. So a short cycle with the same amplitude compared to a longer cycle with the same amplitude will, per equal distant point in time, influence price even more. So if you divide the amplitude by the length of the cycle, you will get an idea of how much this cycle influences the price per bar count into the future. So in that case, per week into the future. And the higher that value, the more important that cycle is, not in absolute terms for the amplitude, in terms per step forward or backward. So a cycle with a high strength has more impact on the week-to-week movements of the price than a low strength. So the strength depends also on the length. And in that case, we should use the cycles with the highest strength, as this influences price the most at this given point in time. So also amplitude and phase varies over time. Cycles are never static, and therefore the current strength of the cycle gives you a kind of measure of how much does this cycle influence a price step per step. So it's independent from the length in the end. Okay, and this now all together gives you an idea about which cycle now to pick. So you see there are more than one peak in that spectrum. So here's another peak at 175 weeks, then the 115 we talked about, and then maybe other cycles here. So now it comes back to the question, which cycle should I pick for my projection, for my analysis, for my forecasting? Therefore, in general, start with the highest amplitude just as a guidance. Yeah, so that would give you a clue. And this cycle often has also a very high strengths, and check then the shape in the spectrum. So you will look for a cycle spectrum with a sharp peak. I think we had a time when I talked about that. So if you try to sit on a cycle spectrum peak, it should hurt. So if it's just a flat plateau, you could sit on that peak, but then it's too flat. So you want to have a sharp peak, which means to the left and to the right side, you have a sharp downward movement. The best it would move back to the zero line here. You see it's not always the case, but that qualifies as a good shape. Here we don't have a perfect shape. You see the left shoulder is not reaching the bottom line here. So it's then a second blip here in the spectrum. So that peak looks good, has a high amplitude. And on the right hand side, it's all shown in a table-like view. So that's this cycle here is just the table sorted by peak. So each peak in that spectrum gets a line entry here in that table. It's just a different view of the spectrum. So we remove the shape. We just look at the peaks which come from that spectrum. And the most important one, that's what I guided you, is the 175. Here you see the Bartels value listed. It's close to 100, so a very good statistically significant. The strength is not the highest, yeah, but if you compare it to the other ones, it's quite in the upper range compared to the other ones. So the absolute amplitude in terms of strength is a good one. And as I told you about the shape here, it's looking good. And that's also the reason why our ranking mechanism, so the rank here is a scoring where we have implemented a guide to help you. So if you're new to cycle analysis, the ranking score will combine everything what I just explained. And sorry for taking that long time, but that's the basics. That's really important that all of us have a clear understanding how and why to pick a cycle. That's even more important than just ramping up a spectrum. For ramping up a spectrum, you could use different charting, different analysis tools, but you need to understand what to do with this kind of spectrum and how to pick and choose the right one if you want to be successful then later on in making trade decisions. So therefore, bear with me that I expanded on that topic here a little bit. But that's, and I don't need to repeat it again, but that's the basic approach we use here now to come to a decision, which cycle should we now apply to our financial data set. I mean, that's why we are here. We want to come to a conclusion, which cycle should we use for forecasting or now analyzing this financial asset. And I hope now you got the point. So that's the most important cycle, and that's also when I use the term dominant cycle. That's exactly the approach. It's a very clear approach. So there are no interpretations or individual reasonings in or other usage. It's always the same approach, how to look at that information, then choose the one while the arguments should be in time, as I discussed. The ranking mechanism is the way we want to automate that process moving forward. But however, we need to understand what is happening here in the back. So once you have that, you can choose that cycle for forecasting. And this is what I often call here on the channel the dominant cycle, because that's the most important cycle, as we now have gone through different criteria to qualify for that. That is now overlaid to the analysis. And you need to be sure that this reading is about time. So the overlaid cycle here has nothing to do with absolute price projections or price targets. So the readings here on the bottom or at the top of that cycle have nothing to do with price projections. That's always to be important to underpin if you're new to cycle analysis. We are using this cycle as a timing information. That's a kind of timing indicator. And second, it is using the detrended analysis. So here in that case, we have, from a long-term perspective, we have a strong uptrending asset we are analyzing here, which I just tried to highlight with this red line. The cycle is always the analysis seen in a detrended fashion. So maybe you need to adjust your brain to this thinking, because if you would add the trend and the cycle now on top of that, I try to emphasize that you would see that cycle now cycling around this trend line here, right? I hope you got what I tried to show you here. Okay, so with the red line, I tried to indicate what this means if the 175-week cycle, which is the Fuchsia one here, is now seen on that underlying uptrend here. But the cycle is shown as detrended. So, and you see, if you now combine the trend and what is really happening in that asset, you see that this cycle has really been very good in the underlying long-term cyclic information, taking away the trend. So that's also if you want to recombine the results of your analysis. So once we have the cycle, you always need to take into account there's still an uptrend. So if we want now, or if we come back to a second to read that cycle, always take in mind there is a trend component, there's a cyclic component, and there is noise in the data set. With the cycle analyzer, we are just analyzing one out of these components, which is the cyclic component. We don't deal with the trend, so you should always have a separate view on what is the trend in the data set, which needs to be taken into account. And then if there is noise in that data set, because noise cannot be identified with cyclic analysis procedures. So that said upfront, I will remove that now for a second. So now let's have a look on that cycle information, and then you can zoom in and out. And that's why I always recommend to do here, maybe just to sum that up. So we see here what we try to align as the timing information, or we just check that the past tops and bottoms in relative terms are aligned with the timing of the indicator here. So it's not always the case. You don't see it always. So here at that time we had a double top and a double bottom. We had a bottom here and a bottom here. And you see the projected bottom would be here. So it's, by the way, if you're then closer to the analysis, it's often the case that there is a shorter term cycle also seems to be in play, which is then maybe projecting this, and we just have selected one cycle here. So in order to detect this double bottom here, we need to add then more composite view, but that's more the complex analysis. So cross-checking here for major alignments of these bottoms and tops we see here. So here it's also nice. It does not need to hit always. And then you can zoom in closer into the perspective of the result of that long-term analysis. And I would not count exactly to the week, but what this is telling us here, we are now moving from a long-term perspective in the European, at least in the German DAX, so this is still the weekly DAX, into a topping window here for August, September. Or in terms of just an outlook until end of that year. So I think if you would judge this as a possible topping area here, long-term perspective, we have now entered the long-term top situation for the German DAX. Latest until end of the year, it should reverse into a longer downward cycle, which will then last the complete year of 2025. And that's now the outlook. That's what we want to get from this kind of analysis. 2025 looks really bad for the German Aktienindex. Long term, right? So I will now try to speed up a little bit the analysis. So that's the long-term perspective. Once you have that, you can move to closer time frames. For example, you are mainly interested in the daily analysis time frame. Now, once you have the longer term picture, so we are close to reaching a long-term top here, expecting a downward move continues through the next year. Now we need to dive down. We want to be more specific. We move to daily data. So let's do the same procedure. This is now a daily data. I have just loaded that daily data. You use the same symbol here. You just exclude the -W, so that then gives you the daily data on the scanner. We start with the 850 bars as a starting point. Standard procedure as always. And we have a look at the bottom of the spectrum. Spectrum now looks quite different. The length which we are getting here is telling us now days. Yeah, so in that sense, we are now talking about daily cycles, not weekly cycles. And you see the most, or one important cycle which stands out here is far to the right, which seems to be a longer term cycle, about 300 something days in that data set. However, and that needs to be taken into account, it's not a perfect shape if you just apply the rules or the explanation which I've given you how to identify cycles here. The reason is that's a very flat plateau here. So the real cycle length could really something between 290 up to 360, right? So even though from a mathematical point of view, it is a peak, yes, right, but it's not the most perfect peak you want to see. However, the other measures which now come into account are good. The Bartel score has a high Bartel score here in that sense. The strength is, compared to the other ones, okay in the higher range. And therefore, due to these two factors here, it is then judged as number one. And the difference, yeah, if you then see the other cycles which come into play, have a huge offset in their amplitude change here. So the only shorter ones which would qualify for possible cycles, because there are very, very flat peaks here. So that's what I said in the beginning. You could sit on all of these peaks here in the spectrum. The only peak which would hurt is maybe that here. So that's very simple thinking. So 50 days, yeah, is the other cycle which would qualify for that. If we look at the spectrum, that's more or less also what the ranking score gives us here. It would still qualify the longer term daily cycle. And then as a second one, the 54 days cycle here, which is quite a huge difference, such a long term and such a short term daily cycle. But let's work with that. So first we use then the long term cycle, at least in the short term cycle. You see now we have the 3 repetitions in place. That's what I tried to, that's what I tried to explain in the beginning. So this is a very long cycle, but in that data set, it has given us 3 repetitions. 1, 2, 3. Yeah, 1, 2, 3. So therefore, that's the minimum rule. If you now want to validate, yeah, okay, but that's the edge case. So there, let's add some more data to validate if that cycle could be used. In that case, if you want to add more data, you just can add 1 year or even longer periods here on that data. And then we can adjust where we want to start our analysis. So the light blue shows us the available data, but not used for the analysis. So therefore, we need to set the anchor point or the starting point for that analysis. And we do that by selecting this icon here, so we can now change the starting point of the analysis. And for that purpose, I will set the starting point here to that major low, because it's also a very valid procedure to adjust the starting point, recalculate the spectrum. You now see it's giving us this more data in the spectrum. You see it has updated, and you see that the spectrum view changes here. And by doing that, you see even that this longer term cycle seem not to be in alignment anymore. And you see it's getting more and more flat, the plateau. So the criteria here now, it's even not listed in as a possible cycle. You see it's the length of 382 days. It's very flat. And if you look up that cycle in our spectrum, you see it has no rank anymore. So here also our artificial guidance would exclude that 300 days cycle using more data, and you see it's completely out of sync at the 4th repetition here. So that's also a valid approach if you're dealing with these edge cases. You see, just adding a little bit more data would disqualify the 300-day cycle, because you see it's completely getting out of sync at that kind of position here. Or you could then argue how to judge these shots. Is this a low or is this a top? So that's maybe we need the 50, the shorter cycle here. So the shorter cycle slightly shifting, so not 54 going to 60, but still staying a dominant cycle here. That's the peak we see here. So by not getting too deep into the analysis, what I did here is just adding a little bit more data to check the persistence of that cycle. Persistence is another measurement which could help you, telling you to trust the cycle or not. And if a cycle is not persistent, which means if you add more data to the analysis and the cycle goes away, does not qualify as a possible cycle, it's not persistent. Because if a cycle comes in and out your analysis, it means, okay, it's not persistent. And you would look for cycles which are persistent if you add different analysis historical data to the data. If you every time get the same cycle length in that spectrum, then you know, okay, this is a very persistent cycle, not just at that single point in time. Through all the points in time you did the analysis, that cycle would be there. And that applies to this shorter cycle. You might wonder, Lars, but 69 is not 54. But I would qualify, this is a nominal cycle about 60 or 50. It would differ anyhow if you change your analysis tomorrow or yesterday, because it's such a short cycle. But you see that peak here, that spike in the spectrum, still the same persistent cycle. And if you would change the analysis data, you would see the 55 cycle is then 55, 59, 60, 64, and moving back. So the length is alternating or changing or varying around a nominal cycle length. And that's also, if you hear the term nominal cycle length, that's most case an average or the average of a possible cycle length. In real terms, the exact cycle will always vary around that nominal cycle length. So therefore 69, it's the same nominal cycle we have seen on the 55 cycle, not using so many data points. Okay, so hope that helps. So by doing that, I would not really use this longer term cycle here, as it really gets impossible to say. Maybe it is there, but it's too flat. As I said, maybe it's a top, maybe it's a low, but it's just too flat. We don't know which phase should be used, and we don't know if this is the right length. So even though we have seen it, the only one left here right now, which should be trusted, and it's even ranked number 1, is the one ranked as number 1, 55, or in that case 69 days in that case. So as always, I would recommend do a quick lookup of historical or past tops and bottoms. You can do this more easy if you zoom into the data set, because it always aligns. And you see here, so from, this is the zigzag you can plot here just during this period. And if you then scroll through the different periods, you also see that here another high and another interim low, another topping process here, another topping process, the bottom close to here, then another interim top here, the low, again a perfect alignment timing wise. Remember, always dealing timing wise. And here you see something which I would also need to talk about. I try to emphasize this a little bit. So during the downswing period of that cycle here, right? So that's the period where this cycle was in its downswing procedure. You see that the price has just moved sideways. So that downswing cycle was able to stop the upswing. So which shows you in a strong uptrend, a downward pointing cycle will just maybe halt or pause the trend for a second or for the length of that cycle phase. If then the cycle resumes in the direction of a trend, it will then even be seen here. So that's why the trend information is important. And you could argue that the cycle is off here in that case. No, it's not, because you need to bring in the trend component. And a cycle phase against the trend often just results in a sideways movement in the price information. So therefore, it's a good example to highlight that here. So, okay, that's just the quick point here. And for that purpose, so now how to bring that analysis together with the weekly analysis. So what you should look out for is two possible dates in the future, which I will align here, early September and maybe late November, right? Because that's the point when the daily cycle aligns with the weekly model in terms of when could be a possible top here. On short term, we could expect another up rally here into early September, or maybe even something into early November. But latest at that point, we should expect then the alignment of the short-term and long-term cycle. So, long story short, that's the analysis of the DAX index. Expect a peak from September to November, December long-term view, which means that the short-term cycle early September. So maybe watch out for another upswing into September, or latest another upswing into November. But latest then the cycles align into a downward synchronization. Sorry for that long explanation. Bill, I see this is a topic I have not explained here. The analyzer is always using the data you just throw into it. So, and if you put in daily data, you need to deal with the question, are we using calendar days or trading days for the analysis? Because that's then also important for the cycle length information. If the cycle length is just given because you put in trading days, you need to be careful with projecting that cycle into the future, because you just deal with trading days. So you have excluded weekends in that sense. On the other hand, you could use calendar days. So with calendar days, you include weekends. However, often assets are not trading over weekends. So, but for cycle analysis, and if you come from the assumption, whatever is the root cause for a cycle, and if the root cause come from natural forces, they will not stop during weekends. Yeah, if life continues even on weekends, and whatever the root cause is, we don't know. We're just analyzing cycles here, but they will not pause on weekends. So therefore, often, and a lot of cycle researcher will tell you, you should analyze on calendar days, not trading days. So Bill, that's the point you brought in. And so if you don't do anything, the analyzer will use trading days. And the only way being able to detect that is you can scroll day by day through that data. Yeah, and you will see that it will skip the weekends. So here we have 17th May, and then the next one is the 20th May. So this is trading day series. And if you don't reset that or define that, how it should be handled, so fill missing daily days is set to none as a standard setting. And if you want to see it in calendar days, you can adjust it here. And that's what you need to do manually upfront. Now we have the same analysis, including weekends. And you see what happens here. It just fills the weekends, so the Saturdays and Sundays, with the previous Friday close. So I would assume that's the Friday here, 17th May. So the 18th and 19th are Saturday and Sunday. So they just get used with the close from the Friday. But it gives you full-blown calendar days. So, and therefore the same cycle, which we have just seen with 60, 64, 69 days, it's the same cycle. It just switched to 98 as we are now talking about calendar days, right? So don't get irritated if the cycle length changes in that case. Now we are dealing with the calendar day information, which then might slightly shift also the cycle analysis, but that's what you need to check then. And there's no final recommendation. You might ask, should I now use calendar days or trading days? Often they are very similar in regards to what's the next projected possible top or bottom. Even though the cycle length is different for sure, but don't get irritated. It's often the same cycle if you plot it then on your timeline on the chart. So I would not take care too much attention to that topic. You just need to do what you're doing. So if you're using trading days or calendar days, and that's just how to demonstrate to change this on the analyzer. Bill, thanks for mentioning that, because that's important if you do the cycle analysis. Okay, that's the German DAX. Now, as I promised, let's switch over to the UK FTSE and even coming to the stocks or to the European overarching market. Yeah, let's bring in, and I will now speed up, hopefully, in doing that. Here we see the daily FTSE, so the UK index, but let's start here with the weekly period again. So that's the weekly data. We have some nice swings here. So therefore, let's start with a little bit longer term analysis. Let's put the starting point here to that key top in the past. So just to see the persistence of cycles over a longer point in time. Done here now, just looking into the spectrum, we have here weekly. We have a nice weekly spot here around 300 weeks. That top is not really perfect. Could be used 180 weeks. I think that's similar to what we've seen in the DAX, but this one is nice. Let's also change it back to the shorter time frame using just the 850 bars. Yeah, it's changing here. So from a long-term perspective, also not really getting persistent results here. And here you see also the problem in cycle analysis. You often get different results depending on the data you throw into it. So therefore, that's another important point you need to understand about. For each other asset, there might be a better analysis frame to put in to analyze the cycles. And that's part of the game, how a dynamic cycle analysis works. It's not the failure of the method, it's just that how it works with all the processing in that data set. So, and then you can switch back and forth between different analysis to see what the persistent changes would be. So here we have 116, 58, and one longer term cycle, but that's not usable here in the longer term range. It's just the 115. So let's again add more data. So that pops up, but we have the 180. So here it's not an easy one. So in that case, and that's also what happens in cycle analysis, you might get situations even this a cycle spectrum might not seem to become usable. So this is what you could spend more time, but just dedicate it to the length of the stream here. So when I'm seeing this kind of spectrum and these kind of results, which I've just shown you by alternating the starting point on the analysis, and you see fluctuating possible cycles, cycle analysis is not helpful in that asset. So we should not use cycles in the UK FTSE to do a London UK based analysis, at least the weekly. And this is what happens. We need to take this into account as a cycle analyst. Not every spectrum could be used, at least not on the weekly series here in that case. We could switch to the daily for sure. So that's the daily information. Using that here. So again, similar to the DAX, we have one long-term cycle view here, which is shown, not a perfect one. And then we have more on the short-term scale, also highlighting the 54-day cycle. I think that's the same length we have seen on the German DAX here. So let's get started with that. And you see here from past analysis, this looks in regards to how many repetitions have a hit of tops and bottom, just scrolling through the past behavior of that cycle. That looks quite nice. I mean, you see here, even in the past, zooming in here, so this top, this bottom is spot on. This is going back to 2021 on the daily time frame. This is going out for 4 years now. So in terms of repetition, that looks fine. Yeah, again here 2022, here the bottom 2022. Again here, this shows you pausing of that upswing cycle from here to here. We have again a sideways movement, which we can observe in the FTSE also. So here I would qualify the daily is usable. Weekly not usable, daily is usable. So here we have a short-term cycle identified, which is currently a bottoming phase. So short term, we could expect another upswing in the UK FTSE, and then coming into end of September or end of November, that shorter cycle aligns. So maybe we need to see the European indices synchronize now, as at least from the German DAX move into a longer term topping window now, which might be period, if I look back here in September. We've seen on the DAX it was early September. On the FTSE, it's late September. And here it's also possible topping window short term in the FTSE late November. I think it was early November in the DAX. So that's where you could then see where European markets might synchronize, as they don't have the exact same topping or bottoming procedures short term. But we have the same dominant cycle lengths. That's the interesting reading here for me. So in the German DAX and the London UK FTSE, in both markets, we see the 55 days cycle valid with different phasing, which should come into alignment in the longer term topping window I've just seen. Last but not least, let's look at the European Stocks 600 to complete the picture. So we have now two countries, Germany, UK. I mean, UK, you have moved out of the European Union, but from financial markets, we still see you here. But now, Stocks 600 has, I think, almost all European countries taken into one broader index. So that's the European 600 companies here, Jin. We see we are in a big topping procedure. That's the daily. That's the daily analysis. We don't have enough data here on that index, at least not here, to do a full weekly assessment. What is popping up here in that case is an 85-day cycle here, but maybe we should bring in this heavy swing here from the COVID part. At least we should have this bottom here as a starting point to include that in our analysis. And let's see, yeah, we have the 69, the 129. Yeah, okay, here that's an interesting picture. Let's speak about these two cycles here. So the best shape, just looking at the spectrum, would have been here the 129 days. You were talking about days. From a shape perspective, that's not the perfect shape. However, there's a peak. But I've seen that just looking at the spectrum, we have a harmonic relation. So if you divide 129 by 2, so do the math, you arrive at 60-something. And 60-something is exactly this cycle here with a length of 69 days. So therefore, these two cycles do have a perfect match. Yeah, there seems to be a third relation here. If you multiply that cycle by 2, 129 multiplied by 2, you arrive at 240, 250, which is exactly that cycle. So here we have a family of cycle series just identified by that peak here. But now we can build a composite. That's also a good example. We don't not always have just one simple cycle here, because on its own, that would not qualify, because here the plateau to the right is not good in the spectrum, and the shorter one would not qualify alone. So, but using this as an anchor cycle, so the anchor cycle, or the most dominant here, is the 129 days. Let's zoom in. Which seems to top out early December and top now. So just adding now this to the mix, we have seen the German with a much shorter cycle, one early September, but this would be not in alignment with the European shorter term cycle. So from a European perspective, all three areas now come into alignment in December. So if you sum this up, the European market as an overall topic seems to have a shorter term cycle top due early December, which would align with the second top of the shorter cycles from the DAX and the UK FTSE. So, but we could add also the, as I said, the 69 and the 248. That's then how you build a composite plot. So as there's not always just one cycle, and if you build that, and you see also if you look into the past, a composite plot would even be much more exact on past tops and bottoms in that market. That's, I mean, by design the case. And therefore, if you know what you're doing, so building a composite is tricky because you really need to be careful in what cycles to pick. Then you see that the composite of these three cycles, which I have picked here now for the analysis, seems to be a sideways or downward projection now into October, and then a sharp peak into December. So that's interesting now. That's how you summarize that kind of cycle analysis, because you should never look just at one asset, one cycle, one market, one time frame. Now we have quickly analyzed weekly series on the DAX, daily series on the DAX, the UK daily cycles, and the European stock market cycles. So it's really a broad view of cycles. The conclusion, just doing this together with you here for the past 40 minutes, brings me to the conclusion, the long-term cycle, we started to arrive in the long-term topping pattern, which is open until end of the year. The daily DAX cycle has two tops coming up in September and November, similar to the UK, slightly out of phase. But if you align both, you will arrive in November. Now, combining this with the European daily cycle, there's just only one topping pattern in December. So all long-term, short-term, and all three markets come into alignment early December, late this year, which is then in alignment with the major top end November, beginning of December. Sorry for taking that long, but you have now a current analysis on the European markets. That's what I promised in the beginning. And I spend a lot more time in explaining how to read that spectrum, which cycle to pick, and why a cycle to pick. Because that's the main point why we are here. We are not providing signals, we are providing knowledge on how to read cyclic information. So I hope you understand the fact that therefore it was a long episode, but also important for everyone out there working with cycles. So last but not least, I see some questions are rushing in. If you have some questions, feel free to add them to the mix. I will now have a look at that part to ensure you hopefully get your answers. Dandy, I cannot repeat this here online as we will spend too much time, but you're mentioning that the DAX performance index and the DAX Kurs index, so it's different if you take dividends into account or not in that index, shows a different picture, and I think you followed up on the weekly. The basic comment on that is just, as we've seen on the UK FTSE, I think on the weekly, if you have quite jumping cycles on and off on the same asset, don't use cycle analysis on that asset. We need to take this into account. Sometimes you cannot use cycles. Or maybe there is a different behavior if you put in dividends or not. But therefore, I would have to look it up on my own. Bill, we talked about the understanding about calendar days and trading day cycles, and you just mentioned, that's important if you want to align this with other models, so with GAN or with Hurst, the Hurst nominal model. You need to understand if the other model is using trading days or calendar days, and then you need to recalculate to get these models in sync. So therefore, always be aware of if you're dealing with trading days or calendar days. So unvividate, you need to switch to another name. It's not pronounceable here. Why don't you make a feature to overlay similar instrument? Yeah, for sure. That's exactly the next step to continue this kind of analysis. I mean, the cycle analysis is the starting point, and what we are trying to also implement is you have the export option to export our analysis into an CSV, separated values file, so you can then continue in whatever other analysis platform or Python libraries you want to continue. In the back, we also have ramped up already API technologies to deal with that data in that sense. Improving our user interface with bringing more features will happen in the future, so we will extend on that. It's just that we also don't want to overload that. But you're pointing exactly in the right direction, where you now should continue with this kind of data. The S&P analysis, we won't do that today, but it's similar. If you follow the analysis from past videos, also on sentiment data, on the financial stress index, the S&P comes into a topping window also in November that year. So it fits. So maybe we have a diffuse period from now until late summer, early winter, where cycles in different markets just have different phases and different lengths. So therefore, you see what's currently happening, ups and downs in different markets, and they might come into sync even with the US markets in November, when the election also takes place. Yeah, at least let's maybe finish today's session, Andrea, with your comment. It was a pleasure. And I really like to see you here live, and at least at the end, a short dialogue. Even today was a short question and answer session. But at least I see that you get some out of it. And that's just the point. I would just recommend, please come back next Monday, same place, same time. I really want to take your questions into account. This was more an educational video by design. However, I always want to provide value in using current data and not past data. Thanks for joining me today. We are running an hour now, so therefore I want to close today's session. Leave me a comment down below, like, subscribe, tell your friend. Let's meet here again next week, same place, same time. Thank you. Have a safe